Okay, so good morning for all participants and also the ones that just joined. We are pleased to have you at this webinar presentation of Melanion Digital today. So this is the executive summary with the key points that will be discussed during the webinar today. You're, of course, welcome to ask any questions you may have during the course of the presentation. Please use the chat box for this. We will make sure that all questions will be addressed by the right speaker at the end of the presentation. So I'd like to introduce you to Melanion Digital teams. So that will be presenting the company today. So first of all, Jade Comer, who is the founder of Melanion Digital. Jade is also president of a management company regulated by the IMF and has a great track record as a trader at Société Générale, and is graduated from Polytechnique. Cyril is the CEO of Melanion Management. Cyril also has a track record in equity options at Odo and Exane Derivatives, and also a graduate from École Polytechnique. And finally, Gianluca Fetta, who will be the head of trading at Melanion Digital, with a strong track record as global head of FX at Société Générale, global head of equity flow also at Société Générale, and global head of FX at Santander. Aldebaran is listing sponsor on Euronext, and he's in charge of the capital raising, and will be also in charge of the listing application on Euronext following this capital raising. Now Jade will talk about the Bitcoin transition. Jade, the floor is yours.
Thanks, Thomas. Before digging into Melanion Digital's business model that is centered around Bitcoin, we wanted to give you like a small perspective about Bitcoin and about our conviction in Bitcoin. And to do that, we need to look back on the history of Bitcoin and why it existed in the first place. The interesting part of it that the creation part of Bitcoin that is not very well covered by mainstream media is the origins, basically. So it is documented that Satoshi Nakamoto, inventor of Bitcoin, can be one or many persons, we don't know. But what we have is the traces of a white paper and blog exchanges and email exchanges they had in the past at the creation part. And one of the main problems that we're trying to address by creating Bitcoin is the problems of the conventional currency. So when Satoshi Nakamoto created Bitcoin, it was just after Lehman defaulted, and there was a huge financial crisis going on. And his main idea was that we have a centralized monetary system that is used by banks, and one bank that go bankrupt in the US can have a cascading effect because of this centralization. So the centralization part was the main issue he was trying to solve. There's another part about the debasement of the currency with money creation done by central banks. So $1 or €1 today will not buy you the same stuff in the future as it does today, basically. And banks must be trusted. So basically, we put our money in the banks, but they tend to lend it away and create credit bubbles, which led to the financial crisis. And you have also all the hacks and privacy issues that banks have occurred in the past years, I mean, since their creation mainly, where identity thieves can drain our accounts. So there's not a lot of privacy or security. And the massive overhead cost of banks doesn't allow them to make micropayments possible, because there is this minimum fixed fee that needs to be covered to operate a bank. And this is the main root of the problem he was trying to solve. So everything you hear about more than that, that is accused of Bitcoin or whatever headlines or bad headlines or you can hear, you need to come back to the initial problem that he was trying to solve and understand from this perspective what was the intention, basically, and how we can make this intention realized, because at the end, it's a virtuous intention. And if we look back now, a couple of years, 13 years after the creation of Bitcoin, and we look at the problems Satoshi Nakamoto was trying to solve. So next slide, please. The debasement of currency is still there, like the money printing post-Lehman, and now to fight for COVID, has been increasing much more than it was before. So the money is being debased. Next slide, please. We still have a centralization problem where one piece of the puzzle can make the whole puzzle collapse. We saw it recently in the Evergrande's problems. So Evergrande was a construction company in China who took a lot of debt, and because of the real estate problems in China, they had financial problems. They couldn't pay their debitors. The debitors are the banks, the Chinese banks. These Chinese banks have money connected with all over the world. So one real estate developer in China can generate another Lehman again. And so the initial problem about leveraging and over-leveraging and centralization is still there, and it's still a risk for our economy and for everybody that is holding money at the bank, basically, wherever you're holding it in fiat. Next slide, please. And the micropayment, this has been still not solved. Basically, we saw last September, El Salvador, who declared Bitcoin as official legal tender, specifically to cater for these micropayments, because in El Salvador, 70% of the population lives on remittance, which represent 23% of the GDP. And on average, these remittance were paying around 6% of fees to get this money. So the estimated move or the estimated cost saving from the move of adopting Bitcoin as legal tender is around $400 million. So, and the banks cannot compete in this stance, because they cannot have, they need to build branches in El Salvador, and it's not economically viable for them to do it. So they mean for financial inclusion, which is one of the big problems that our financial system has today, or the big limitations at least, Bitcoin is one of the best solutions to do it. Next slide, please. So how did Satoshi Nakamoto solve this problem, or what did he address this problem? By basically creating the blockchain mechanism, where instead of having everybody depositing their money in the banks, the Bitcoin network is a decentralized ledger where everybody can see this ledger. It's a public ledger. And on this ledger, there's a lot of addresses, wallet addresses that are registered on this ledger. Anyone can create an address and then can send or receive from this address on this digital open source ledger that is available on the Bitcoin network. So the way it is done is that every sender needs to send his Bitcoin to a receiver, goes through a process where the sender initiates a transaction. This transaction is validated by the Bitcoin miners. There's a lot of critics about Bitcoin miners, but this is specifically what their work is done. And to be able for this ledger to be commonly shared and the same one shared amongst everyone, only one participant can validate the transaction. So what Bitcoin miners do is they race to validate these transactions so they can modify this digitalized open source ledger. So after the transaction, the wallet of the sender is emptied from the Bitcoin he sent, and the wallet of the receiver is credited with the Bitcoin he sent. And because there's this race of Bitcoin miners to validate this transaction, because they are rewarded by transaction fees on this, it creates a lot of mining power and electricity consumption. And our goal at Melanion Digital is to solve this Bitcoin mining problem, while at the same time participate in this whole Bitcoin network and this whole solution, basically, to the problems that Satoshi Nakamoto was trying to solve and that are still valid today. Next slide, please. So what Bitcoin doesn't solve? So the big headlines that we hear about Bitcoin is hacks, theft, terrorism, scams, etc. All these were not part of the equation, or were not part of what was Bitcoin built to be. And the only way that we can make Bitcoin solve these problems is by regulation. So like any technology, like any means, the first usage of this technology, even when the internet came out, the first use cases were criminals or unregulated activities that went on the internet and started operating the first ones. With regulations that is going that is coming and that is continue to build up, all these problems that we have heard in the past will disappear. Even the energy one will disappear because energy is going to be regulated because of the issues of energy, and also because of the business model of Bitcoin being the Bitcoin miners being trying to minimize their energy cost. They will soon, slowly but surely, go towards the cheapest energy cost, which is renewable energies. Next slide, please. So now I'm going to give the scene to Cyril, who's going to continue.
Thanks, Jad. Well, so as you may all know, well, Bitcoin exposure is a must. I mean, when we compare the Bitcoin with other asset classes, you can easily see that Bitcoin is beating all other asset classes. We give in this slide the example of gold and S&P 500. We could do the same exercise for any other asset class. But well, more than the long-term, I mean, the fact that it is a long-term performing asset, we need to be aware that Bitcoin is also a real diversifying tool with a low correlation with all the other assets we can find. If we just give the numbers regarding the correlation, we have a correlation with the other asset that is between minus 20% and plus 20%, which is really low with any other asset. And of course, and in a way, that's the reason why we have such a performance. That's a hedge against inflation. Jad told us about it. And I would say that the only potential correlation that we can find for the Bitcoin is with the depreciation of of the other currencies. So, well, yes, we can say that Bitcoin exposure is a must. But I think you are aware of it also. It is difficult to invest in Bitcoin, I would say, in a global, resilient and solid environment. Why? For many reasons, because it requires certain types of resources, it requires technical skills, it has possible risks, it is better to know the ecosystem. So that's why we created Melanion Digital. And so we propose a vehicle that is quite easy to understand. That's a vehicle through equities. And with I would say, the luck to have a team of experts in a lot of areas, with also a clear investment strategy, and Gianluca will tell us more about it just after me, and also an independent supervisory board. We will talk about it later. So the idea for Melanion Digital is to give our investor an exposure to the Bitcoin, but also to optimize the Bitcoin ecosystem. So not only having an exposure to the Bitcoin, but also being able to have the overperformance that can be given by the trading, of course, the mining, and also the lending. So, well, now I let Gianluca explain a little more in details our strategy.
Thank you, Cyril, and good morning to everybody. I'm going to detail a bit more our strategy in Melanion Digital, and especially conclude on the main message of the presentation then, which is why we are so convinced that our approach, which is management, is far superior to whatever else you can find in the market today. Our strategy is based on 4 pillars: holding, trading, mining, lending, HTML, and we will be deploying them in this order. Just before going into the detail with this, let me recap today how you can get an exposure to the Bitcoin. You basically have 3 different ways. You can either hold the Bitcoin directly yourself, and if you do that, assuming that you are able to go through all the hassle of opening the right accounts and then justifying where your Bitcoins have been coming from in 10 years when you try to cash them in, you will have roughly 1 Bitcoin after 10 years. If you go on the passive managed products like the ETFs that have been launched tracking the Bitcoin, these are future-based ETFs. The problem with that is that the cost of the carry, the cost of the rolling the futures, month over month is about 10% a year. So your cost of holding those ETFs is about 10% a year of the performance in Bitcoin. It means that in 10 years' time, if you invested 1 Bitcoin today, you will have less than a Bitcoin through those kind of products, simply through attrition. In our case, we have the characteristic of a tracking product through our holding strategy, but also an overperformance that is delivered by the 3 other pillars, the trading, the mining, and the lending, which will end up giving you an overperformance over a period of time. So let's say after 10 years, which is my time horizon, it's an investment, it's not speculative trading. You will have 2 or more Bitcoins with us. So what are we going to do with investors' money? The first thing is holding. So we will be buying Bitcoins 1 for 1 with the money that we receive from the investors. This will be your main risk in terms of the investment. Your indexation is 100% to the price of the Bitcoin. And it has to be clear and well understood. The reason we are doing this is that we believe that the Bitcoin has very bright days still in front of it. And our base case scenario, as we see in a moment, is for a price increase of 20% a year, which is 1/5 of what happened in the past 5 years. Now, you've also heard that once you have coins in any sort of form, so it can be stable coins, can be Bitcoins, it can be other coins in the system, you can use them as collateral to do a number of things that are extremely profitable. You know that, for instance, you may have heard on stable coins, you would receive from very reputable shops, and we're not talking about fancy initiatives, you can receive something like 8-9% in dollar stable coins. The reason those people are able to serve this kind of yield is that it's because, in fact, there are so many opportunities in the market that you can generate a yield in excess of that just by holding and trading, just by having Bitcoins or any other coin in the system and using that as collateral. So trading. Bitcoin is one of the biggest retail markets in the world, with barely little to no proper institutional access as of today. It means that there are gigantic flows and strong opportunities all over the place due to the fact that the volatility is super high, there's leverage, and it's a retail market. So while the volatility might be a deterrent or might scare off some of the investors, from our perspective is the trading's paradise, because that's where the opportunities lay for us, and that's where we've been able to generate in the past 7-8 months when we've started testing and running the strategies on real money, and it's not back testing, of course. We've been able to generate consistently every month between 3 and 5%. And in some cases, in one case, much more, but was a specific circumstances that may not reproduce. So trading is the first pillar to generate overperformance. Down to mining. Mining is a fairly different story. It's really a separate endeavor, but it's an endeavor where we believe there is a lot of interest and a lot of upside. First of all, it provides a different stream of revenues from trading. And also it allows us to come and have, let's say, royalty style types of deals before building on a second phase, even a co-initiative with miners, because we solve a number of problems that miners have. In the most simplistic terms you can imagine, a miner is what? Is an electricity contract, long-term, stable, cheap, and a huge data center where you have to invest heavily in machinery, the famous ASIC, and you cash out the money today, you get Bitcoins starting 6 months to 12 months after, when the machines are delivered and connected. So miners, they have a mismatch of time. They don't have necessarily all the cash to invest, which we do have, we will have, and a mismatch of currency, so to speak, because they have to pay the machines in dollars and they will receive the revenues in Bitcoins. And these are things that we can address in a partnership with miners, and the returns in that are extremely high because as of today, and you can check it, there are a number of mining companies that are listed. Some of them are also in Melanion ETF. The production cost of a Bitcoin, so a new mined Bitcoin, is between $5,000 and $10,000, which compares to a price that is hovering between around 45,000. So there are not many other activities where you can have an 80 to 90% gross margin. And finally, lending. There are a lot of initiatives in a number of domains where borrowing and lending Bitcoins is becoming more and more demanded, and there are opportunities there. This is the fourth pillar to create overperformance compared to the Bitcoin. And it's the fourth because it's still the youngest activity, and there's a lot of developments there, and we will be part of that movement, and we will be exploiting our capital to make it work efficiently. Next slide, please. The point really where we think our model is superior on the active management side is that you have out there mining companies. Well, the problem of that is that they are trading probably at 10 times of the net asset value, which is 10 times the cost of the machines. And clearly that's not what we're aiming for. We're aiming to build it, so to pay NAV for it and not 10 times the NAV. But you can invest in a mining company. You can invest in a crypto hub fund, which is there are a few here and there in various jurisdictions. You can invest into the broader ecosystem of Bitcoins through Coinbase or other companies that have projects in the blockchain. But our ability, what we bring to the table will be the ability to be nimble and to allocate capital in an opportunistic way, depending on where the opportunities are, where the best opportunities arise. So the fact of blending together the holding, trading, mining, and lending will allow us to be extremely efficient and maximize the performance while at the same time reduce the risk and diversify the sources of revenues. Next, please. So this, if there's one slide of the whole presentation that you need to focus on and to remember, is this one. What does it say? First of all, the Bitcoin can go up, can go down, and as we said, your primary risk is the Bitcoin, the price of the evolution of the price of Bitcoin. However, based on a very conservative business plan, raising only the 10 million that we're raising now and without anything else, and net for the investor, we are extremely confident that in every scenario, we are able to generate a meaningful overperformance due to our active management, due to the other three pillars after the holding part, so due to trading, mining, and lending, for the investors, and deliver, therefore, in every market configuration, a meaningful outperformance and a meaningful benefit for the investors. So one way of looking at it is that our contract with the investor is, in a way, extremely simple. You invest with us a number of Bitcoins, and we will be growing that number of Bitcoins for you instead of letting it, let's say, sleep passively on some account. And of course, our view is extremely bullish on the Bitcoin. That is why we are proposing to our investors and ourselves, because in the end we are putting quite some money in the venture ourselves. We are proposing to have a primary exposure to the price of the Bitcoin through the holding strategy. But as I said, we are extremely bullish. Once the institutional investors will enter the market, the price of Bitcoin will not only progress but explode. But having said that, we are confident we can outperform that through our active management strategies. And I will conclude there and then over to Cyril again for say the details on the structure and our ESG approach.
Thanks, Gianluca. Yes, it's an important point. We will do our best to have all these activities with an ESG and net zero carbon footprint approach. What does it mean? If I take the example of the mining, for example, we will analyze how the company will behave towards environment. So it means that we will do our best to produce green and clean Bitcoin. So it means Bitcoin mined with renewable energy. And so this newly mined Bitcoins will, I mean, have never been used. So we have the clean Bitcoin notion. But we will also see something very important regarding the social part. I mean, it will be ensured that the company, for the mining company, respects the rights of its employees, that there will be no abuse. So all these checks will be done. Regarding the social part, we can also talk about the Melanion Foundation, which is a non-profit organization created to provide scholarships for talent from modest backgrounds. And regarding the governance, I'm going to tell you more about it a bit later. But well, we have an independent supervisory board for the company, so the governance is also something that we're going to take care. Regarding the structure, it is, as it is written, a typical structure under French regulation. In French, we call it Société en commandite par action. So it's partnership limited by shares, and with a general partner that will be Melanion Management, and a limited partner that will be Melanion Digital. And of course, as I said, an independent supervisory board with different duties, and in particular, it will be, well, the audit committee, strategic committee, remuneration and control committee. So how does it work, and how will Melanion Management operate? In fact, we have a management agreement between Melanion Management and Melanion Digital. And I mean, for that, we are in a pure pass-through system with a cap at 3% of the NAV, and also a 10% performance fees with the high watermark system. So Melanion Management will operate the 4 pillars Gianluca described. So it means the hodling, the trading, the mining, and the lending. You can okay. Regarding the independent supervisory board, so we have 9 people coming from well, diversified backgrounds, but with clearly recognized expertise in their current fields. And that's the good point also for this supervisory board. We have people from the ESG part, the asset management, the energy, also the human capital. We have also people for in the legal and compliance field. So all these people will help us to have, I would say, an independent look at all, I mean, different activities we will have in Melanion Digital. Regarding the financing rounds and the timeline, so in 2021 we launched, I mean, the end of 2021 we launched Melanion Digital. The first round, so that's a closing at 10 million. As you all may know, the company's founders have already committed to take up to 30% of the fundraising. An important point is the fact that options, warrants, will be attributed on a first-come, first-served basis with a strike that is 150%. So with a 10 euros basis, that will be a strike at 15 euros, a maturity 3 years, and ratio 10:1. And we, as Gianluca said, we already started to operate our HTML model. In 2022, that will be the listing on the French market, on Euronext Paris, and we will continue to develop our model and build a track record. We will do a second round for the second financing round. Next, in 2023 and 2024, we will extend the business to other crypto activities. So it means two things. The first one is that we will have a look at other cryptos, potentially, and we will also develop new activities. So it can be crypto indices, crypto exchange, product structuring, crypto consulting activities. So I mean, we have a large possibilities for this. I mean, for this expansion, and a third round for financing that will be for 200 million euros. Melanion Group, I let Jad tell more about it.
So just a few words to conclude basically about how this project comes as the ultimate goal of a transformation process that is going on in the Melanion Group, where basically initially we started as a dividend future specialist. Then we expanded to other equity derivative strategies. And then 2 years ago, we decided to switch and develop a new branch. And our strong conviction is that the future of finance and of this whole digital valuation of assets is going to go online, basically. So the traditional values where people used to invest their money and get reward and transact, etc., is going to switch from traditional venues to this new crypto, Web 3.0, etc. venues. And Bitcoin is the main and core belief, but we will also add later on more projects and more products on top of them if we find it interesting, etc. We're looking at DeFi, we're looking at a lot of other stuff. And Melanion Digital is going to capture basically all the opportunities that is going to be in this new ecosystem. And it will be for us like a switch from the traditional asset management world to the crypto asset management world with all the potential that it has. as it's for the first time we're seeing the digitalization of value and the exchange of value online, basically. Now to the Q&A. There's a question. I'll let Gianluca ask the question and answer it.
Sure, and please, everybody, add your questions in the chat. We will be addressing them one by one. So the first one from Frank Devigne, can you elaborate your thoughts about the current drop on the Bitcoin today? I would say no. No, let me elaborate on this answer. We don't like to comment daily moves on the Bitcoin for the simple reason that the Bitcoin is an extremely volatile asset. And our view is not based on trying to time the markets on one day or another, but is based on the fact that the direction of travel is clear, and that the Bitcoin could lose 75% of its value tomorrow or triple. This would not affect the long-term desirability and the long-term trend in the Bitcoin. That is created by the rate of adoption, that is created by the build out around the ecosystem, and by the problems that are being solved by the Bitcoin. So to come back to today's drop, there is a national sport in journalism, which is basically explaining after the fact all the reasons why you knew that it was going to drop today and at the exact amount. The reality is that apart from the generic feeling that one, we are coming out of a period, meaning 3 weeks, of extremely low volatility on the Bitcoin, and two, there has been a risk-off movement across the board in the risky asset and in the tech stock due to the renewed fear of higher interest rates in the Fed. There's not much more I can say, but why is it feeding into the Bitcoin this night and not 2 days ago or in 2 days? I don't know. And the good news that I don't need to know for the work we are doing here, so that our trading strategies are not based on that. Second question, can you elaborate further on what makes you confident that the TML performance will be strong enough to mitigate the downside risk of holding lag under normal market conditions? Let's put some numbers. We run a very conservative business plan where basically a worst case scenario in terms of over performance is in the region of 10% a year. So if the Bitcoin drops faster, you will be losing money, and that is clear. On the other side, if the Bitcoins increases, of course, you will be gaining money. So it's pretty much where I was about a year ago when I first started to look into this project. I didn't know that much about Bitcoin, but one thing I knew was that as an agnostic, it could either go to 0 or be multiplied by 10 again. And probably with similar probabilities, even if you know nothing, and that still makes times 5 over a time horizon of 10 years, and it makes it a very good investment in terms of risk reward and something you want to hold. After that, spending more and more time and looking into the trends in terms of adoption and all the projects, and the fact that institutional money still basically has not started to invest. I just came to realize that the day your pension fund, your insurance, life insurance policy, etc., will be diversifying something like 0.2% of their assets in Bitcoins, well, you can guess for yourself what this is going to make for the price.
I'm going to answer the next question from Walid. Kindly confirms that we can invest by contributing Bitcoins. And what is the minimum subscription amount in Bitcoins? Thank you. Yes, when we started this asset raising, we gave the opportunity for investors to contribute in Bitcoins. So if you want to participate in Bitcoins, it is possible. You need to act fast because we're close to the deadline. But yes, it is something possible. And the minimum subscription amount is 500,000 equivalent. But for sake of publicity, because we're looking to be the first capital increase in Bitcoin, we're happy to lower it a little bit further. And the next question, I think, Gianluca, you can take over.
Is your main bet that institutional investors will become big players in the cryptocurrency? What are the mitigations edges possible in case of an adverse future regulations? So there are two complex questions, but to the first one, institutional investors. As of today, cryptocurrencies as an asset class represent something between $2 and $2.5 trillion. This is about 5% of the US equities, which represent 50 trillion. So it's something that is harder and harder to ignore by institutional investors. It's something where there is a very strong demand from private high net worth and private individuals in general, and where there are more and more products coming out allowing people to invest. So can larger asset managers and banks continue to ignore the Bitcoin and not propose a way to invest in it? I don't think so. Of course, my perspective is not 3 months, is 5 years. So if I put myself in 5 years' time, Bitcoin will be mainstream. There will be so many different ways to invest and so many products, and there will be a much easier access from institutional investors. This is very much linked to the second part of the question, which is regulation. Regulation is coming, and that's very good. As much as you've been reading a lot of headlines about this exchange being fined and that exchange being threatened and so on and so forth, in fact, this is an extremely good sign because it means that essentially the US, because in the end that's still the main place where things happen and the main driver globally, have decided to regulate, and have decided to regulate in particular the centralized exchanges. Their biggest fear is that if they close down the Binance, Deribit, OKX, and you name it, all the business will simply move to the decentralized finance, and that's going to be even more difficult to regulate. So they've made, and you can see that there's been a number of regulatory pronouncements or statements that they are all going towards increasing the level of regulation in the centralized exchange and making it easier for them to regulate and for institutional investors to invest. Not only that, you have seen in the past 3 months, I think it was about 3 months ago, 4 months ago during the summer now, China essentially for reasons of alleviating the power grid and shutting down coal power stations to meet the broader climate goals, they shut down Bitcoin mining, making it illegal overnight. Not only nothing happened on the Bitcoin ecosystem, so you could still process transactions, you barely noticed anything, But as a response to that, the United States, sorry, not the United States, but a number of states in the United States, Texas being one of the most prominent, passed a long list of laws and regulations welcoming the business of mining from China. And all those laws and regulations are relatively crypto-friendly. So the landscape today is that from a regulatory perspective, Bitcoin and the other currencies are not currencies, cryptocurrencies are not currencies, but are assets, which is extremely positive because it means that it's like gold, a store of value from a regulatory perspective, which is also the narrative we adhere to. But from a regulatory perspective, it's like a commodity, it's like gold. It's not like the dollar. So it's not a business that should be left to the central bank and to the banks. It's an investment tool, it's an asset. And all those pronunciations basically go in the right direction into making the Bitcoin much more regulated and accessible for everybody and for institutional investors in the end. One last thing that I would like to touch on, speaking about regulation, Bitcoin and crime. Criminal activities are not limited to Bitcoin or coins in general. You have diamonds, you have gold, you have cash, and you have a lot of techniques to launder your dirty money within the banking system. So this has always existed and will continue to exist. However, in the Bitcoin space, there's one thing that is emerging now is that the ledger is keeps the track of every single transaction since the beginning of time, which means that the addresses might be anonymous, but you can still go back despite a number of techniques to try and make it anonymous, more anonymous. You can still go back, you can still freeze a number of addresses. And with the new systems known as, they go under the name of Know Your Token, it's more and more possible to track the origin of the Bitcoin. So it's not true, in my opinion, that Bitcoins or cryptocurrencies in general do favor crime, criminal activities. I think we can move to the next one. Will you trade other cryptos other than Bitcoin in the short term if there is an opportunity? The short answer is yes, but let me just be clear on the message. The contract with the investor is to outperform the Bitcoin. It means that your delta exposure is essentially on the Bitcoin. It does not mean that we are preventing ourselves from trading in other cryptocurrencies where we see opportunities. It just means that our benchmark, so to speak, if we want to use the term borrowed from the traditional finance, will be the price of the Bitcoin and the evolution of the price of Bitcoin. But yes, we will be looking at and trading other coins. Although, just bear in mind that we are coming from a financial background, not from a geek background. So as of today, we are not promising and we don't have the expertise and we are not looking into finding the next coin that will be multiplied by 10,000 in the next 3 weeks. That's not what we do. Do we plan to hold Bitcoin directly or to go long Bitcoin through exchanges? Will you also be holding stable coins for the purpose of arbitrage and trading? There's no straight answer in the sense that we will be holding Bitcoins, we will be buying Bitcoins through the exchanges at the beginning, we will be holding them as collateral there, but also at times in cold storage, depending on the various strategies, needs, etc. We are not planning to hold any meaningful amount in stable coins because we want to have all our dollars invested in Bitcoins.
Just to complete this last answer, I would say that you can capture the arbitrage and the trading strategies by putting Bitcoin collateral, not only stable coins. So we're gonna prefer using Bitcoin as a collateral because of stable coins and because of the risk behind stable coins that are very high, especially Tether, where you have more and more headline saying that there's a lot of hidden accounts and unclear messages around it.
Very well.
Okay.
We are getting to the end of our time. We are happy to take more questions if anyone wishes.
Yes, indeed. So thank you for the questions and thank you, gentlemen, for the presentation. Just a quick reminder about the timeline and next steps regarding the fundraising. So we expect letters of intent to be received by January 14th, which is Friday next week at the latest. And following that, legal work will be done through the organization of a general meeting of shareholders to vote on the planned capital increase. And then all investors will receive the subscription package to do the administrative work. So all the team and myself remain available for questions. We can stay a few additional minutes on the call should you like to address additional points, or after the call, if you will. We all thank you very much for your attention, and of course remain at your disposal. Have a good day, everyone.
It would seem there are no additional questions. People are disconnecting, so we can probably end. One question. Or not. So we can probably end the call here as there are no additional questions.